So you're looking to buy a property in Portugal, but you're not quite sure how to go about getting a mortgage. While financing a property in Portugal may seem daunting, it's actually a pretty straightforward process. In today's video, we'll take you through everything you need to know, from the application process to understanding hidden costs. So let's dive straight in. Hi there, my name is Amy and I'm a buyer's agent at Goldcrest, the independent property buying service here in Portugal. At Goldcrest, you, the buyer, are our primary concern, not the seller, and we will always negotiate the best possible deal for you, ensuring that you have the latest market intelligence and innovative valuation methods to make an informed decision. So first things first, what is a mortgage? Simply put, a mortgage is a loan you take from a lender, such as a bank, to help you purchase a property, land, or other types of real estate. The borrower agrees to pay the lender back over an agreed period of time with interest. A mortgage is a very common way to finance a property in Portugal. Mortgages are available to both residents and non-residents, with lenders offering relatively low interest rates. Lenders also carry out legal checks and valuations on the property to ensure everything is above board. So you're probably wondering about your options. In Portugal, there are two types of mortgages available: fixed rate mortgages and variable rate mortgages. You may be thinking, well, which one should I go for? A fixed rate mortgage allows you to pay back a set fixed rate each month for a certain period of time. And with a variable rate mortgage, your monthly repayments will vary depending on Euribor. This is the basic rate of interest that banks and lenders in the European Union use as a reference when setting at their interest rates. Choosing the right option for you will depend greatly on what you're looking for. And remember, we highly recommend seeking expert advice to help you find the perfect mortgage deal for you. So now that you're a little more knowledgeable on the types of mortgages on offer, how do you apply for one? Well, once you found a property and carried out the necessary checks to make sure you can buy it, your first step will be to compare lenders and all the deals that they offer. There are a variety of banks and mortgage brokers in Portugal that offer different loans and credit to foreigners, such as Banco Best, Bank Inter and BBVA, and also Santander. Once you approach a bank, they will give you a no-obligation preliminary analysis. If you're happy and wish to continue, they'll give you a full mortgage quote, and then complete application form and submit the necessary documents. If the mortgage is approved, you receive a formal offer where the bank will lay out all of the terms and conditions of the loan. Following this, the bank will carry out a full valuation of the property. You will then make arrangements for the completion of the sale, which includes transferring your funds for the purchase of the property to the relevant account. The bank will then set a completion date for the mortgage payment. Next comes the exciting part: final payments and signing. The bank will arrange payment and all other fees and taxes must be paid. This includes property and deed registration fees, admin fees and commitment fee, survey and appraisal fees, and also legal fees on top. Finally, the mortgage deeds must be signed in front of a Portuguese notary. Now that you know what to expect when applying for a mortgage, let's take a look at some of the requirements that you may encounter. You must be at least 18 years old to apply for a mortgage in Portugal, and many lenders cap the borrowing age between 65 and 70, although sometimes this age can be higher. Most mortgage terms for non-residents are between 25 and 30 years, and you'll need to have a Portuguese tax or NIF number. As a non-resident, you'll need to pay a deposit of at least 30%. The lending criteria will depend on your financial position, your current income, earnings, any debt, and your employment history. Some banks will value certain types of income over others, and most Portuguese banks offer foreigners mortgages with loan-to-value ratio of 60 to 70% of the property's purchase price. Also, when looking at a mortgage loan, you will also need to get life insurance. Some banks may also require you to have home insurance as well. And a little tip from us: it's important to remember that different banks have different requirements and offer different products, so make sure to shop around and find a bank that suits your needs. Some banks may have better interest rates but limit what you can borrow. Some banks may also only provide variable rate loans, while others offer both variable and fixed rate mortgages. So be sure to check the best option for you. Again, the interest rate of your loan will be determined based on the Euribor or Euro interbank offered rate. The bank will also assess your monthly outgoing expenses, including the mortgage repayment, to determine your ability to repay the loan. All in all, your total monthly outgoing should not be more than 35% of your monthly income. To give you an idea of what to expect, many banks and lenders have a mortgage calculator available on their website. You can use this nifty tool to work out an estimated monthly mortgage repayment based on your finances. If you're a little hesitant about navigating the mortgage process in Portugal, it's helpful to have an experienced mortgage broker on your side. They will help you to compare products and rates from different types of lenders, not only banks, and find the best deal for you. So now that you're all clued up about applying for a mortgage in Portugal, why not give us a call and see how we can help you? Yes, we know it's a lot to take in, and that's why we've created a nice little guide for you to clearly navigate how you get a mortgage here in Portugal. You can check it out in the link in the description below. Please don't forget to hit like and subscribe. My name is Amy, and this is Goldcrest Insights.